Welcome back. India's housing market is on a high. According to data research company PropEquity, demand for new homes in top 7 cities in 2023 will touch 5 lakh units, which is the highest in the last decade. Now, there's also been a sustained price increase of 10 to 15% per annum post-COVID, if not more, in some of the top micro markets. Now, how long will this euphoria continue, especially as rising home prices along with sharply higher interest rates on home loans brings down affordability? Less and less people can now afford to buy a home. I caught up with Ashvinder Singh, CEO of Bhartiya Urban, and Rishi, the Chief Operating Officer of Max Estate, on the sidelines of the CII Realty Conclave, and started by asking, how long will this upcycle continue? Gentlemen, thank you very much for joining me. We've had a very passionate discussion at the CII conference, but my question to you is, Ashvinder, how long do you think is this cycle of this up move and this fantastic demand?
See, looking at the macroeconomic indicators, looks like another 2-3 years. I would not say a decade. That would be a little over optimistic. We are an oasis right now across the globe because there's a lot of things happening in the US, in the Europe, Russia, Ukraine, other stuff that is happening in China. Looks like 2-3 years, and if everything goes well, we should see this demand momentum to carry on.
All right. What's your own view? Rishi, I mean, Max Estates is expanding quite aggressively into residential now in the NCR market, which is also one of the most exuberant markets. It moves from being sane to insane very quickly.
So, Manisha, thank you for having me in your show. First, just a couple of facts. 2022 demand, volume, value, decadal high. The trend is sustaining in 2023. I think there are clearly some fundamental drivers behind it, and having an economics background, I would say near to mid-term, it will sustain. That could be for a few years, as Ashvinder said. One of the biggest driver is home ownership mindset. From rent to own is really driving the end user consumption demand. I think, and even in our first launch that we did in Noida, you'll be surprised, more than 60%, despite ticket sizes being very high, was end user driven. Number two, affordability quotient are all-time high despite increase in interest rate. I think what has happened is COVID unfortunately dented low income segment, but the earnings potential not only got preserved but improved for mid and upper segment. As a result, you are seeing this drive towards premium and luxury, and share of affordable is decreasing, which is something happy to talk about further. And consumers' preferences are dramatically changing. So they are looking for more generous spaces, thanks to work from home as well. They're looking for sustainable spaces. They're looking for tech-enabled spaces. As a result, what is going to happen? And they're looking for very high quotient of services and amenities. As a result, what's going to happen is this is driving the consolidation of market share towards corporate and institutional developer, which is the other trend that we are seeing. So is it going to sustain? The demand is going to sustain. Pricing is anybody's guess.
Okay, hold your thought on pricing. Let me get Ashvinder's view there. Pricing, Ashvinder. So there are markets like Bengaluru where pricing has gone up modestly, which is the way Bengaluru market behaves. It does not go nuts at any time. But yes, annually it has also seen about 8 to 12% increases since COVID, right? Then there are NCR markets which have doubled since COVID, like your Dwarka Expressway or Gurugram, some of the key markets in Noida. So the range is quite wide. Do you fear that the market, because supply seems to be lagging demand at this moment, the biggest danger that we face is probably prices rising too fast?
No, we discussed this, Manisha. It is a very important question that you're asking. With the kind of new launches that are happening, there is going to be a period where supply will become more than demand. and that's the way it is in a market which is upbeat. Secondly, maybe the current level of capital value might be fine, but there is a tipping point, and if the capital value keeps on growing at this stage, unaffordability will step in. Maybe the affordability index, etc., might be in control, as Rishi is saying, but it is a matter of time that if it grows at this level, 8 to 10 or 8 to 12% even for Bangalore is high, considering it's a high ticket value purchase. So we need to be cautious. We need to be cautious. We need to ensure that sales keep on happening. I have always believed that real estate is first a function of cash flow and then profitability. We are getting the profitability. Developers are getting the margins, but I would seriously be cautious and look at financial closures of projects and go one step at a time. And I hope that prices don't keep on increasing the way they are increasing for the next couple of years.
Okay, on pricing and affordability, Rishi, you did say that we are at a decadal high of affordability, but that has shifted. If I look at data, we were at that affordability high in 2021 and the highest, because interest rates since then have started increasing. And if you look at the percentage of EMI that I have to pay today, which is in 2023 on my home loan versus 2020, my EMIs are more expensive, 13 to 14%. Do you also worry that land is becoming so expensive in some of the markets that you operate, which is then pushing the developers to, price their product higher, and there's only that much price elasticity in the premium and luxury market?
So first, response to your interest rate question, the interest rates have gone up. The floating interest rate of around 6.5% in mid 21 and now 2023 9 odd percent for loans up to 30 lakhs, for example. But the impact of that, of course, is much less in India than developed economies because of the relative delta. And second, that impact has happened more for low and medium segment population.
And not for premium and luxury.
Noted. Right?
Okay.
Number one. Number two, this trend, by the way, is not only true for real estate. This trend is true for many other sectors. If I give you another data point, the two-wheeler segment demand is still 24% lower, but the premium car segment, though we don't operate in affordable segment, but as I said, I'm equally worried about that particular divide. First of all, we have to understand why that is happening. One is this income inequality post-COVID. Second, the rise in land prices and commodity prices has really squeezed, and there is a pricing cap, particularly for affordable segment, has squeezed the margin, and the room for error is now negligible, which is incentivizing developers to continue to supply that particular piece. And number three, as I said, the impact of the interest rate has been more on that particular consumer segment. Now, market forces will correct itself, but I strongly think the policy incentives under Prime Minister Awas Yojana or Affordable Housing Scheme for All or credit subsidy, I think the scope of that has to go up. Right now, you can get those incentives for houses up to 45 lakhs, but that scope has to increase for people to buy homes in the urban cities, for example.
All right. Ashvinder, what's your view? So Rishi has made two very important points. One, if land, which is your basic 35% cost of any project, outprices itself or goes up very fast, if all the materials become very expensive, labor wages are going up, it probably is very risky for private developers to play in the mid-segment market, right? So do we need more government incentives?
See, if I simplistically answer this very important question, the government needs to keep on investing on infrastructure. The travel time from a suburban area to an urban area, the way it is in the US, has to reduce. You look at the entire United States, everybody stays in the suburban area and they work in the urban area, and this is what will happen in India. If you want to build affordable housing, which you have to build, you will have to build great roads, great infrastructure, so that you go to a place where the price of land is low and the cost of construction is still in your hands, though even if input prices are going up. However, infrastructure spend is far more important for the government rather than giving any other subsidy, and let the market forces play. They have to build infrastructure And that's where the affordable housing will definitely come into play, because then the margins are also protected.
Gentlemen, thank you very much for joining me for this very special discussion. Big takeaways: while strong demand is good, prices of homes in certain micro markets have run up too fast and too quick. Builders have to be careful before raising them exponentially going forward. Also, someone needs to step in and make quality affordable homes for India's lower and middle income families, because private developers are moving away from that segment. Thank you so much for joining me and tuning into the Urban Agenda. This is Manisha Natarajan signing off.